Good day. My name is Professor Anthony Revicchio. I am the founder of the Financial Advisors Group, a money management firm, and CEO of Revicchio Online Tax Advisors, an income tax preparation and planning firm. Grab a pen, grab a piece of paper. This video cast has to do with income tax planning for children. Let's talk about that concept for a moment. And please, again, grab a pen and a piece of paper. I will be taking a 1-hour lecture, maybe 2-hour lecture, and trying to condense it to 10 minutes. So forgive me while I refer to my notes. Please grab a pen. Let's talk about tax planning for children, everyone. Let's get to the real, what I call official and unofficial concept of this video cast. The official concept is, of course, when we talk about income tax planning for children, we're talking about planning for the future, right? Not your future, your children's future. That's the official definition. But some of you could be sitting here saying, well, I like the unofficial definition better, right? That definition is, I'm a parent, I got a child, what kind of tax money can I get out of it, right? So we're going to try to cover both. And we're going to talk about what I call benefits. What benefits can the child bring you as an adult? What benefits can they bring to you as a member of the household? What benefit can they bring to themselves for the future? So let's talk about income tax benefits. Benefit number 1, child care credit. Now, child care credit's a little misunderstanding, right? You hear child care credit, you're thinking child care, right? No. When we talk about child care in this instance, the child care credit relates to the parent. And it relates to children age 17 or less. And if you have a child that's 17 or less, and if you're eligible for the child care credit, you get approximately about $2,000 of free money. That's why it's called a credit per child. Oh my God, right? I'm a single guy, but I'll have a child on that. Bad joke. But that's your first credit. An automatic $2,000 per child for every child 17 and younger, as long as you're the custodial parent. You like that phrase, custodial? We'll talk about that in a minute. Second benefit, dependent care credit. Dependent care credit applies to people under the age of 13. It also applies to real daycare or real child care. Dependent care credit could also relate to an aunt, an uncle, a living relative that you might be taking care of. That credit can bring you an additional $500 per person. Credit number 3, the earned income credit. That earned income credit is targeted towards low-income families to provide relief. And per child, that could be an additional relief of $1,000 per child. So again, number 3, the earned income credit. Number 4, in my opinion, one of the most juiciest. But now we're getting away from the child being 13 or 17, right? Now we're talking about the child going to college. So now they're 18 or over. And when we talk about college, there's a lot of what we call educational benefits for, yes, that child who now wants to be an adult. The first one, and forgive me as I'm looking at my notes, sometimes I can't read my own handwriting, you know. The American Plan Credit. Let me rephrase that. The American Opportunity Credit. The American Opportunity Credit can give, for families that have a young child going to college, up to $2,500 for tuition, books, and other type of expenses. Based on the type of college they're going to, they might be eligible for another credit called the Lifetime Learning Credit. And again, that credit, upon eligibility, can bring you an additional $2,000 for books, supplies, tuition. And still staying on education, Let me flip this around a little bit, not talk about tax credits, but something you can do for yourself, and it's also a tax benefit, called College 529 plans. Now, College 529 plans are a combination of a tax benefit as well as an investment benefit, right? So I would tell you to, of course, talk to your tax and or financial advisor. But those accounts are wonderful also for savings. As you put money into the account for college, you get a tax deduction for all the money you put in on a yearly basis. And then when the money is spent for college expenses, those expenses, if they're geared towards college, are tax-free. But again, you'd want to talk to both an income tax and financial advisor to find out if that is best suited for you when we talk about educational credits. So, ladies and gentlemen, covering those 4 areas, right? The child care credit, dependent care credit, the earned income credit, the educational credits. That's over $10,000 in free money for the whole year. Isn't that wonderful? Slow down. There are many rules, many regulations. As you've heard, there's age eligibility tests. As you also heard, there are income eligibility tests. So yes, learn about these credits. Speak to your tax preparer. If you like, you can feel free to give me a call as well. We'll come back to that in a moment. But there are also other strategies that ones can look at besides the ones that I've just mentioned. UGMA accounts, right? We call them UGMA, but the official title is Uniform Gift to Minors Act. You can give money to a child under this type of custodian account. And there are tax benefits. You heard me mention 529 plans. Do not forget IRA plans, either traditional or Roth IRA plans. Great way of saving. And of course, you can gear it towards long-term goals. So, ladies and gentlemen, I hope I didn't keep us too long. The plan was 10 minutes, so I'm not counting the time. What's important to me is the education, and I'm hoping you enjoyed this video cast. If you have any questions on what I mentioned, feel free to give me a call. It wasn't a 1-hour lecture, it was a 10-minute lecture. 347-575-5045. My name is Professor Anthony Revicchio. I was trying to have fun with this video cast. I hope it was educational. Be tax smart. Have a great day.